You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome. Today we're taking a focused look at the whirlwind world of finance and technology. Our mission, really, for you, our listener, is to cut through all the noise.
Yeah, filter it down.
Exactly. Highlight what's surprising, what's relevant,
Yeah.
and just make you instantly well-informed.
Precisely. And we've gathered quite a collection of news and trends. They really show where fintech is heading, from these huge company valuations to innovative payment stuff and even some critical shifts in regulation.
Right.
What's really fascinating, I think, is just the speed. How fast it's all evolving will help you connect those dots.
Okay, let's get straight into it then. Because we are seeing some real fireworks in the fintech market. Chime, for instance.
The neobank, yeah.
The big neobank operates totally online, no branches.
Yeah.
They just had this incredible public debut, surged 37%, pushing its value over $20 billion.
And that's not just, a win for Chime itself. It strongly signals a renewed investor appetite.
For the IPOs.
For fintech IPOs, exactly.
Yeah.
After a pretty significant dry spell we've had. So if you connect this to the bigger picture, Chime's strong showing, it could really unlock a broader wave of listings maybe in 2025.
Oh, interesting. Like who?
Well, potentially big names like Klarna, maybe Stripe,
Yeah.
waiting in the wings.
Okay. And speaking of these high valuations, there's also Ramp, the fintech startup.
Corporate cards.
Right. Corporate cards, financial tools. They just raised another $200 million, hitting a remarkable $16 billion valuation.
Which is just massive.
Massive,
Yeah.
especially when you think, last year they were valued at $5.8 billion. What does a jump like that really signal? Beyond just, investor belief.
Well, it suggests investors are betting really heavily on this SaaS-first financial infrastructure becoming sort of the default for businesses.
Okay.
It's a fundamental shift, kind of away from those traditional banking relationships for corporate spending, recognizing the efficiency, the data, insights these modern platforms provide.
So with these valuations soaring,
Yeah.
how are the established players and the new innovators, how are they adapting their payment strategies?
Yeah, that's the crucial question, isn't it? American Express, for example, they're really accelerating their push into B2B, business-to-business payments.
Right.
They're encouraging corporate clients, hey, use Amex cards more often for work stuff, and expanding their expense management platform, too.
So more integration.
Totally. Their ambition is like a global, multi-rail B2B network offering seamless digital tools, virtual cards, the whole package.
Okay, now this I find really interesting. Marqeta is powering Klarna's expansion in the U.S.
With the physical card.
with the physical Klarna card.
Yeah.
Imagine having that pay-in-4 flexibility.
Which is so popular.
So popular. Now available basically anywhere Visa's accepted. It blends that buy now, pay later model with, just a traditional card for everyday spending.
And Klarna already has, over 1 million cardholders in Europe, so this is a major move for them into omni-channel spending.
Absolutely.
And then, on the really cutting edge, Shopify. They're making a significant move towards mainstream stablecoin adoption.
Okay, break that down a bit. Stable coins.
Right. So stablecoins are digital currencies, like USDC is a big one, and they're pegged to a stable asset, usually the US dollar. So their value stays, stable.
Got it. Less volatile than other cryptos.
Exactly. And Shopify is letting merchants accept USDC payments via Coinbase and Stripe, specifically on the Base network.
Which is a newer, faster blockchain layer.
Yep. So this offers faster, borderless transactions, lower fees, and merchants can even choose to get payouts in their local currency or just hold the USDC directly.
Interesting flexibility there. Okay, beyond payments, what about security? Fraud's always a huge concern.
Always. And Plaid is tackling that head-on with their new system, Plaid Protect.
Okay.
It uses just a device fingerprint, that unique digital signature of your phone or computer.
Right.
But it can pull from over 10,000 data attributes, and they claim it catches 40% more first-party fraud.
First-party fraud. That's when actual customers doing something dodgy with their own account.
Yeah. Exactly. Using their own legitimate card or account for fraudulent buys. Plaid says their system catches way more of that, the stuff older systems miss. It's a huge leap in security for businesses.
Wow. Okay. That's significant.
And that focus on security is critical, yeah. But on another strategic front, you see companies like Adyen. They're really prioritizing organic growth.
Meaning building things themselves.
Yeah, exactly. Building their own payment systems, their own point-of-sale hardware, instead of just buying up competitors. This deep focus on, tight client relationships and using their own proprietary data, they say it gives them higher authorization rates. It really distinguishes them.
So stepping back,
Uh-huh.
what does all this mean for the bigger picture? It sounds like a landscape of really bold decisions, long-term bets.
Definitely.
I mean, think about Airwalix's co-founder, Jack Zhang.
Yeah.
He famously turned down that $1.2 billion acquisition offer from Stripe, 7 years ago?
Yeah, I remember that.
And today, Airwalix is a $6.2 billion global banking and payments platform. Talk about a confident bet paying off.
And Airwalix isn't, totally unique there. Companies like Mercado Libre, they've similarly kind of defied conventional wisdom to build these empires.
Guys, in Latin America.
Mercado Libre turned into a fintech powerhouse through Mercado Pago, now serving 64 million monthly users. It proves that long-term vision can sometimes trump those quick exits.
Okay, shifting gears a bit. What about the consumer protection side of things?
Right, that's always part of the equation.
The York's legislature just passed a bill. It would stop most food places and retailers from refusing cash payments.
Ah, the cashless society debate.
Exactly. This is aimed at protecting more vulnerable consumers who really rely on cash. There are fines for violations. It really underscores that ongoing tension around financial access for everyone.
And sort of relatedly, we're seeing shifts within the regulatory bodies themselves. A veteran enforcement official from the CFPB.
The Consumer Financial Protection Bureau.
Yep, that's one. He's stepping down. And this comes amid reports that the Bureau might be scaling back some investigations. So, things are shifting there too.
So quite a landscape. From soaring valuations and really innovative payment methods to these crucial debates about financial access, and even shifts within the watchdogs themselves. It's clear the world of fintech is just buzzing with change.
Absolutely. The speed at which these new solutions are popping up and the impact they have on how we all transact, how we manage our money. It's truly remarkable.
So what stands out to you listening to all this? How might these changes, shape your own financial future?
It leaves us wondering, I think, as digital payments get ever more sophisticated, what will be the lasting role of actual physical cash in our society?
You've been listening to The Vocal Technologist. Tune in next time.